Welcome back to the Stocks Update. Let's dive straight into what's unfolding with Lucid Motors right now. Lucid stock took another hit today, dipping by around 2.24%. It reached a low of $2.14 and managed to climb briefly to a high of $2.26. At the moment, it's hovering around a crucial technical level, which we'll explore in more detail later in the video. This video is for informational and educational purposes only. It is not financial or investment advice. If you decide to invest, please do your own research. Your money, your decision. One of the striking things today was the trading volume. Over 50 million shares exchanged hands. This is well above the daily average volume of 11.8 million. That's a clear indication of heightened interest or concern, even though there hasn't been any official announcement from the company or new filings with the SEC. However, something noteworthy did emerge: a promotional offer that might give us some clues. According to an update from Lucid Oasis, the company is launching one of its most aggressive promotional campaigns to date. Buyers can receive up to $31,500 in credits, along with a low 2.99% APR financing option. On the surface, this looks like a great deal for potential customers, but for investors, this could be a red flag. Just last week, an analyst weighed in on Lucid's performance. They noted the company's bold targets for 2025 in terms of production and deliveries, which seem promising on paper. But at the same time, they highlighted Lucid's patchy record when it comes to hitting milestones, generating consistent profits, and keeping momentum. In short, there's a credibility gap that's still haunting the stock. This latest promotional campaign could be interpreted as another indication that demand remains sluggish, especially with the Gravity SUV still in the pipeline and no signs of a mass ramp-up yet. Investors might be putting all of this together and concluding that the company is once again trying to boost sales artificially through discounts, which doesn't inspire confidence in organic growth. Then there are the macroeconomic factors adding to the uncertainty. Recently, the U.S. imposed higher tariffs on imported steel, which could drive up manufacturing costs for EV makers like Lucid. There's also talk that California may walk back parts of its aggressive EV mandate. These types of policy shifts, if they occur, could seriously affect future EV adoption rates and leave companies like Lucid vulnerable. On top of that, global economic data released today wasn't encouraging. Both the global manufacturing figures and ISM manufacturing data missed expectations. Typically, weaker data might lead markets to expect interest rate cuts, which could be a short-term positive. But with ongoing tensions between the US and China and the new steel tariffs in play, investor sentiment seems to be leaning more toward caution than optimism. The result? The market seems tired. Investors appear hesitant to take any risks, and Lucid is stuck in the middle of all this noise, trading sideways in a sort of limbo. Another aspect worth noting is what's happening behind the scenes with institutional traders. There's been unusual trading activity in both the regular and dark pools. Early in the day, we noticed a streak of buying that temporarily helped support the stock price. But that was quickly followed by large-scale selling, including block trades of 100K shares, or more clearly, not retail investors. This pattern suggests that big institutions may be scaling down their positions, possibly in anticipation of further declines. Now, while I've always said I like Lucid's products, and I still believe they have the potential to become truly disruptive in the EV space, I won't ignore the warning signs. Many out there will hype the stock no matter what, encouraging people to buy on every dip. I take a different route. I call it as I see it. It's possible that investors are haunted by Lucid's track record from 2022, especially the company's silence during tough times. Back then, management didn't offer much clarity, and that lack of transparency damaged trust. Right now, we're not seeing Lucid CEO Mark appearing in interviews or making reassuring public statements either. It's eerily quiet, and that silence is feeding into the uncertainty. Short interest data is also revealing. The latest figures show an increase of 965K shares being shorted. Currently, around 30.87% of the float is sold short, which translates to roughly 380 million shares. That's a massive bet against the company and shows how bearish some players are. You'd think shorts might be quiet today, given the data and low volume days usually being Monday. But surprisingly, they've been quite active. That could be part of a broader technical strategy to push the stock down past key support levels. Looking at the options market, we've seen 597K call options and around 90K puts being traded. Roughly 59% of all the trades lean bearish, meaning most investors are betting on further downside. Bulls are hoping the price will close above $2.50 by the end of the week, while bears are targeting levels below $2. With the current price hovering around $2.18, the battle is intense, and the $2.18 level seems to be acting as a technical pivot point. If the stock breaks below that, the next support zones lie around $1.99 and then $1.69. Shorts often focus their selling pressure near these critical technical areas to cause breakdowns. This same pattern has happened before key resistance gets hit. Shorts ramp up, and the stock is nudged lower. So keep a close eye on that $2.18 line. A close above might allow for a short-term rebound, but a close below it could open the door to another leg down. As of now, we haven't seen any new analyst upgrades or downgrades, nor has the company issued fresh press releases. Technically speaking, Lucid is trading below all of its major moving averages and appears to be in oversold territory. A strong positive catalyst like news about a strategic partnership, a major delivery update, or even the long-anticipated Gravity campaign could shift momentum quickly. The company needs to act soon if it wants to stop the bleeding. Lucid's management has hinted in the past at rolling out a broader marketing effort for the Gravity SUV, but so far there's been nothing concrete. If they've got something major in the works, now would be the time to reveal it. Otherwise, this downward trend might continue unchecked. So what's your take? Are you still confident in Lucid's long-term story? Or are you getting concerned about the recent lack of transparency and institutional selling? There's one more thing to keep in mind. Last Thursday saw an unusually large trading volume. Remember, I'm not trying to spread fear, but if the Public Investment Fund (PIF) was among the sellers, they would be required to file a report by the end of today. If no form is submitted, we can rule them out for now. But if they do file, then we'll have confirmation they're trimming their stake. And that leads to another big question: if it's not the PIF selling, then who is? Could it be other large holders like Vanguard or BlackRock? They hold significant positions, Vanguard with over 110 million shares, BlackRock with about 40 million, UBS with 56 million, and even CEO Peter Rawlinson with a sizable stake. Any major moves from these investors would certainly affect the stock price and sentiment. So, once again, let me know what you're thinking down below. Are you buying this dip, or are you stepping away for now? Do you think the discounts are a smart strategy or a red flag? If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.